Hi, good morning, everyone. Today we'll be looking at one of the example of a counter that make a pretty good move, which is Ping An Insurance Group Co. of China in Hong Kong Exchange. So before that, let's recap on what are the characteristics of a good long-term counter or good long-term stock. So before we begin, we preferably use a weekly time frame for a better view or perspective and to eliminate all the whipsaw along the daily time frame. And in this case, I use 30 moving averages, volume, preferably dollar normalized volume, or we call as DNV, as well as relative strength indicator. So, what are the characteristics of a good long-term stock or counter? So, the first one is the price should be above 30 weekly moving averages, and the 30 WMA line should be on an uptrending basis. The breakout should have occurred with more than 5 times of the volume or the normal volume. So let's say if the normal volume or average volume for 50 weeks is about 1 billion, and upon breakout, the volume should be at least 5 billion volume. And number four, there should be already a 1 year plus decline prior to the breakout. This is to ensure less retailers are resistant. And number five, there should be a pullback occurrence around 3 weeks after the breakout, in which the volume is back to average volume. So in previous example, upon breakout, the volume is about 5 billion, and then on pullback basis, the volume being reduced back to 1 billion. And in terms of its relative strength, the RS line or the RS reading should be positive and on uptrending relative strength. And this is one of the example that I use Ping An Insurance Group Co. of China on 1 week basis, Hong Kong Exchange. So this chart that we are using, or this movement back in November 2014 until August 2015. Let's see how much that it has increased or appreciate along the line. So I would say that we do some entry around 37 points here up until its peak. So there's a 64% of price appreciation within 161 days, which is about half a year or 150 days. So what are the characteristics of this counter that we are looking at? So let's go back to the basis. So we use weekly time frame, and also we use 30 weekly moving averages, volume, and relative strength. So as you can see, the blue line here is the 30 weekly moving averages that I'm using, and the second pin here is the volume or dollar normalized volume. Actually it's pretty the same, but a dollar normalized volume take into consideration the price of the stock itself. And also at the bottom here is RS, or being known as relative strength, in which we compare the performance of Ping An Insurance, whether it's increase, stagnant, or decrease compared to Hang Seng Index. So we can see the breakout occurred on 1st of December 2014, and see the volume over here. It's 35.15 billion versus 4.7 billion, which is about 7 times volume. And there's also up gap around here. Candle above 30 weekly moving averages, and there's a breakout and up gap of 35 billion versus 5 billion, 7 times averages. And there's also a minor pullback around here, as you can see on 8 December 2014, 15 December 2014, 22nd December 2014, in which the volume decreased back to 6.4 billion versus 5.5 billion. And upon breakout, the relative strength reading is about 0.03 and uptrending until the top. So if let's say you do some purchase over here, about 36 or 37 Hong Kong dollar, and then it is an easy money for about 60%, 60 to 70% profit. So when we already identify the counter, so I think this is the best time for entry upon the pullback. And then the stock will make its run until the top. And how can we see the danger is you can see there's a down candle with massive volume of 15 billion versus 9 billion average. I think it's around here, yeah, back in 26th of May 2015. So when there's a red candle followed by a massive volume, then it's a big danger sign. And what about the definite sell rule? We can sell the counter once it broke below its 30 weekly moving averages. And there's also a few questions on how long should I hold the counter. I think you should hold the counter once you bought it on pullback, and you can put about 6 to 10% of cut losses point, as long as there's a good volume along the way, and also the RS line is keep on uptrending basis, and I think it's a good reason to stay on the counter. And once the stock going south and broke its below 30 moving averages, and it's a definite sell rule. So with that, thank you.